The startup ecosystem faces funding crunch in 2023. Startups funding in the US market dropped by around half to $32.5 billion in the first quarter, while in China it fell 60% to $5.6 billion. However, the problem is not limited to the US and China alone. A report by CB Insights indicates severe worries for Indian startups. The sector recorded a steep decline of 75% from the previous quarter, with just $2 billion funding in Q1 2023. This could very well hurt the economic growth of India. The situation is worsening as only 271 Indian startups raised funding in the first quarter of 2023, compared to 561 last year. Once a booming sector, it is also seeing job losses and delayed IPOs. And at this rate, the sector may end up raising less than $10 billion this year, a far cry from the record $30 billion garnered in 2021 and $20 billion in 2022. But why are startups struggling? Global factors such as high interest rates, inflation, and war-like situations are impacting investor sentiments who once saw great potential in the sector. And Indian startups, which are far more reliant on foreign capital than global peers, have seen a more severe squeeze. Investors like SoftBank, BlackRock, Sequoia Capital, which led the funding boom in India for years, are now hesitating to make investments in the country. According to Reuters sources, investors expect the situation to worsen and many multi-billion-dollar firms to cut valuations in near future. But the Indian government has high hopes for the sector and has announced several initiatives to support the industry. Extending period of incorporation for budding startups and tax incentives were announced in its budget 2023. But are these measures enough to save this sector? And to what extent can these initiatives help the sector to restore its past glory?